Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy, how are you?
Hello, everyone. Good to see you again.
It is very good to see you. Eventful week so far. We're only on, I think, Thursday, right? So it's been eventful. We had, obviously, after the last video, we had Donald Trump getting infected by COVID. Dramatic scenes over the weekend. Now he's back in the White House. And the reason we don't want to talk about it too much is because everyone already talked about it a lot, right? But what we do want to talk about is a couple items, right? And it really starts with Jerome Powell, right? The US Federal Reserve. He came out with some statements saying that the government really needs to give some more stimulus to in order for the recovery to happen, right? What do you see there?
Well, this is not new. The U.S. Federal Reserve has been iterating their stance, calling for the government side to step up as well. And so far, it has been quite lopsided since the last stimulus. The Fed has effectively done most of the heavy lifting, but the Fed does see that government aid as another way to directly help consumers and small businesses, especially when the cases in the US are rising and a lot of people are jobless. They needed those paychecks to tide things over, and they have expired. So we really need some direct government measures.
And then we thought, though, there was obviously lots of talks, right? I think Nancy Pelosi and
Steve Mnuchin are making progress. It was true that they were getting so close, like a negotiating table. The Democrats started with something way higher than what the Republicans wanted, and then they started negotiating and converging towards a number. So the last thing before Donald Trump returned and halted all negotiations out of the blue, that was what jolted the market last night. But right before that point, the Republicans were 1.6 trillion. Democrats were getting it down to 2.2. So they're sort of converging. One side wanted more, one side wanted less, right? But I guess a good old Donald came back to disrupt everything on the table.
So do you think that then for his strategy is coming back to the table before the election? But he basically said nothing will happen until the election. But like you said, and like the Federal Reserve said, is people will start to need the money, right?
Well, when it comes to President Trump, you gotta keep in mind that he has a habit of flip-flopping. Already he's saying he's open to helping small businesses and airlines with additional aid, right after saying aid discussions is off the table until the election's over. I guess what really is going on from a game theory perspective is a negotiating stick and carrot. So what that means is Trump is saying no, but he's sort of, the real issue is with all the lockdowns that's going on in a lot of states, and those states, the governors were majority Democrat governors. So he's sort of unhappy with how, with economic activities, right? He wants to look good on the economy front into the election. He wants to open things up. And the aid, the stimulus is sort of a method to get the Democrats to play start. So that's one way to look at this whole fuss. But just keep in mind that he flips and flops. Don't take it too seriously.
Yes, we've seen it before. Especially if you've been a long-time listener. We covered these things before. The other big thing, though, was, and I think that this is, the market doesn't like these kind of things at all, right? The antitrust probes that are going on. And then maybe you can give the listeners a quick, maybe 20-second background of where this is coming from, and then actually what it is all about, right?
This is related to the election as well. And this is probably the most important development that we're talking about today. As you know, the House is dominated by Democrats, and the House has set up a subcommittee for years to sort of probe into whether there's any antitrust behavior of big tech firms such as Amazon, Alphabet, which owns Google, Apple, Facebook, and the likes. And they came up with a 449-page report making accusations in great details about how these tech platforms can actually turn competitions away by cutting competitors off from their platform. In the case of Apple, is quite famous, right? The iOS app development environment, people can get cut off if you're not if you're not aligned.
The rules, right? Yeah.
Yes, I think there's a lot of truth in some of this, and the size, right? These companies are at least $5 trillion US. Apple itself is, I think we last chat about it, the first to break 2 trillion.
Yeah.
So it's sort of true. They are systemically important, and hence the antitrust angle came up. Now, a Democrat clean sweep of both chambers in the Congress in this election could mean that they're going to get ahead with much more efficiency on antitrust issues. And the breakup risk for big tech is that risk is on the rise with a Democrat win, like a clean sweep, right? Yeah, exactly. If the Republican retains one of the chamber, they can still veto that, and you have a stalemate and things are fine. But a clean Democrat sweep would be the biggest risk for tech firms right now.
That's a presidency. That would be pretty powerful, yes. No, absolutely, Freddy. And I think that leads us actually basically to kind of like some of the investment lessons, right? That we often talk about. And I think, we've seen obviously throughout COVID, throughout 2020 now, tech dominance, right? When it comes to public markets, these companies have grown tremendously compared to other industries, right? But things like antitrust probe, right? Things like a vaccine and what other things could happen, right? What would happen to these companies, and how is StashAway prepared for that, right? If a rotation would happen?
I think it's important to understand the human nature of recency effect. We tend to remember the most recent things and we give the most weight to. And in this case, this pandemic hits a lot of us in a very dear, very personal manner. And we've seen how tech firms have really, on average, benefited from that, right? Rubber and gloves, the other one. And as you've already seen, the comfort gloves, top gloves share price is highly volatile. They have already made cost a lot of people to have lost money, right? Depending on how you enter into the trade. The thing is that don't treat your investment as a trade. It's longer term. You need to not just say, well, there's a pandemic going on and 100% of my portfolio is intact. You've got to think about rotation, right? So the antitrust is one thing that could turn this around. The vaccine, if a vaccine, an efficacious vaccine can be found, the market is so fast moving, it's going to start pricing in. It's not going to wait for a mass production. It's just going to start moving first. And then you start seeing traditional assets and even airlines start turning around, having a new life, whereas tech firms start seeing rampant profit taking because it's sort of very, very hyped up now, right? So overall sector rotation can happen. A lot of big firms, big banks, analysts have already warned about that risk going into next year. Antitrust is the other reason why this can happen. So the lessons here is to say, I want to think long term, how do we mitigate these sort of factors? So at StashAway, we really focus on diversification. When you are just investing in tech, it's a concentration risk. You should have technology as an asset class within your portfolios. That's an allocation, but it shouldn't have been 100%. So what we do is to create diversification with sufficient amount of other protective assets, geographies. In the case of tech, we focus more on China as the next Silicon Valley. Long term, that's not going to change. China also does not have the same amount of money printing as the US. Hence, from a currency angle, it's safer, right? So there's a lot of ways to source diversification, different exposure to different factors and teams, and that collectively makes your portfolio diversified and resilient over the long term. That's what we believed in, and that's what we continue to do, regardless of how in the near term a particular asset is doing.
Yeah, no, thank you, Freddy. I think this sums up so well on what we do on your side on the investment front. So thank you for that. Thanks for the listeners again, as every week. We do have a couple upcoming webinars where you can learn a lot more about this as well. So next week in Singapore, we have our How to Invest the Right Way with ETFs webinar. That's on the 15th of October, 7 p.m. The link to sign up for that is in the show notes below, as well as on our website. That's where we can really learn a little bit more of what Freddy just said as well, right? How to build, diversified portfolios using ETFs and, kind of the strategies we use on picking those. For Malaysia, we have a webinar as well. It's called Investing Basics. That is on the 14th of October, 6 p.m. Again, link to sign up for this is in the show notes below. As always, Freddy, thank you so much for being with me again on here.
Pleasure.
And we'll be with you, listeners, again next week, okay? Have a wonderful day. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.